We are looking at the past picks now from David Burrows, the president and chief investment strategist at Barometer Capital Management. January 7th of last year, you recommended Grupo Televisa, SAB, TV on the New York Stock Exchange, up by about 4%, but I understand you did fairly well and you got out.
Yeah, media was a theme we were focused on through most of last year. We had many companies in that group. But as it became clear that the developing markets or less developed markets were behaving a little more poorly, we started reducing some exposure, and this was one that we came out of just above $30. Listen, it's a great company, and I think that ultimately it's in the right group. They've got very good growth, but we prefer to focus on really more U.S. domestic companies than the more global businesses.
Are you still in Disney?
We're still in Disney,
okay,
and it continues to behave very well.
Now, this one you just mentioned off air didn't quite work for you. iShares Mexico Index Fund, EWW. What was the thinking, and why didn't it work out for you?
Well, our expectation was that as the U.S. economy recovered, Mexico was likely to come along with it. And it just plain and simple didn't work out as well as we had hoped. We got stopped out around $70 a share and have been short a lot of South American countries over the course of this year. But if you look at our breakout, we have about 70% of our equity exposure in the U.S. About 30% would be split between Canada and Europe. The Canadian holdings largely are companies that would benefit from a weak U.S. dollar. But we have really very focused portfolios.
A weak Canadian dollar.
Sorry, weak Canadian
dollar. Right.
Yeah.
And you expect, well, the U.S. economy is growing better, and you also think the currency is going to do better too.
Yeah, and clearly, the message from the Canadian Central Bank yesterday was, the inflationary pressures really are very muted, and the language was changed to telegraph that maybe economic data isn't quite as strong, and we think that there is risk on Canadian dollar down to sort of the mid 80-cent range.
Sitting around 90 right now. LyondellBasell, LYB on the New York Stock Exchange. This is a big winner for you, up by 35%.
Yeah, this is one that we continue to own. We've recently pared back just a little bit, but the chemical sector is one that has been a big beneficiary of all of that oil and gas production in the U.S. So one of the biggest feedstock costs for a chemical company is natural gas. So Lyondell has really benefited from those low prices because, of course, they're getting feedstock at much lower prices than the rest of the world. So the cash flow generation has been extremely strong. And within basic materials, I would say chemicals is probably the most interesting area. And it's an industry that's going to continue to grow in the U.S. as that production continues.
Just back to Mexico here, do you think the fact that they're going to be opening up their energy sector, that will help the economy, and that this kind of ETF could work, but that may take a while?
It just may take a while. I think certainly it's going to be a good thing if Brazil privatizes and if Mexico privatizes. I do think, though, that with all of the new technologies, the energy industry is going to be a tougher industry for the producers, probably better for the service companies.
Right.
And the refiners.
Okay, David, those are your past pick. LyondellBasell Industries, iShares Mexico Index Fund, and then Grupo Televisa. David's still holding Lyondell, as he mentioned. We'll take a short break here. We'll get back to the questions on North American large caps after this.